join me in welcoming Ms. Julia Leung with a huge round of applause with us right here from Hong Kong. Thank you.
Thank you for the kind introduction. It's really my great pleasure to be here with you today. It's been honored to be invited by the chair of the Securities and Exchange Commission to address this distinguished audience. It's a pity that I cannot join you in person in this venue, but technology has actually brought me close to the audience here. And I can assure you that this is the real me, not deep fake. And also I am doing it and delivering this in real time and not a pre-recorded. So before I talk about how Hong Kong navigates this regulatory journey on digital assets, let me start with some data points about the digital asset landscape globally that can actually lead better to why Hong Kong SFC is regulating and how we regulate. Now, you're aware that in this year alone, there's been a sharp, two markets have risen sharply in terms of prices. One is the price of gold, which has been up more than 60% so far this year. And another one is the crypto and the digital asset market as represented by Bitcoin, which has risen 40%. Now, you can debate on the cause of why it has risen so much, but one of the reasons which a lot of the analysts were telling you is that both were thinking that holding gold as a hedge or holding Bitcoin would actually be better than holding fiat currency, the US dollar and the likes, particularly in this time of uncertainties. Now, so it will be apt to compare the market cap of gold market and compare it to this new asset class of digital crypto. Now, if you look at the circle on your left, it's the gold market total cap. It's 30 trillion US dollar. And the digital assets total cap is 3.7 trillion. But you have to compare it. Digital assets, it has grown just in the past 10 years, whereas the gold market has actually have a much longer decades of history. Now, if you compare the trading volume of the digital assets market, crypto mainly, it has a global annual trading volume of 70 trillion US dollar. I just used the Hong Kong equity market, just the cash market for comparison, is 4.2 trillion. So the digital asset globally is 16 times that of Hong Kong equity market. And as you know, our market is not small when we have actually more than double our turnover this year. So the question is why? I mean, why are we seeing such a quick emergence of this so-called, we can debate whether it's a new asset class, but it has actually certainly grown quite a bit. One of the reasons is we are witnessing a younger generation of investors entering into the investment landscape. They live their life on the mobile technology. Their approach to investment is certainly very different from the times that we are when I grew up at least, and they prioritize speed, accessibility, and peer-driven information from the social media more than the traditional news outlet. Now, I just checked, the majority of population in Pakistan is actually under 30 years old. And I was particularly struck by the fact that the median age of your population is actually 21, which is probably one of the lowest in the world. And so I think how they behave, how they invest in the future is certainly something very relevant. Now, moving on, I'd like to show you this chart. Now, I've heard your panel this morning, and it's about how to develop a deeper and more liquid capital market. Now, as we all know, it should have a structure which is very diversified, with diversified products and diversified controls and holdings and intermediaries, and transparent. That's the classic of developing a capital market. This chart and the next one will show you how concentrated the DA ecosystem is. Now let's start with the column on your left. Now this is in terms of the outstanding market cap. As you can see from the little bubble in below, 5 cryptos actually account for 85% of the total balance and 95% of the total turnover. Now, if you look at stablecoin, which is in terms of the stock, is only 6% of the total. But out of this 6%, 82% of the balance and the turnover are attributed to Tether, that is USDT and USDC. So it's very concentrated in a few products. If you go on the stablecoin use cases on your right, you see that the stablecoin turnover, as I just said, is 95.4% of the turnover, whereas other cryptos are 6%. If you break down, you can see that the stablecoins are actually used as the medium of exchange, as the currency of exchange for crypto trading. That is, when you convert fiat into Bitcoin, you first convert it into USDT, and then and using that to actually be buying and selling Bitcoin. Now, what I want to focus on is the 30% as payment. Now, the little box on the right, you said these payments are for cross-border payments, for real use in real life. Now, these payments, it makes up, in terms of the amount, it makes up like only 3% of the traditional currency market. But then 75%, you find that this payment, actually 75% take place in developing economies. Latin America, 25%, Southeast Asia, South Asia and Southeast Asia, where you are, it's 25%, and the rest is between Africa and Middle East. Now, it goes to an important point that there is actually utility function for these stable coins, for particularly in developing economies where traditional finance or banking services are not as developed, or at least they are developed, but then they may be a higher cost for cross-border remittances. There's friction in these kind of cross-border payments. So that's where stablecoins are being used. An important fact also is in the bottom box here. In terms of platforms, Binance actually account for 40% of the global turnover, which is huge. And the top 10 platforms, that is cryptocurrency exchange platforms, they account for 85% of turnover. So you can tell from here that products are very concentrated, platforms, intermediaries, very concentrated, and this is a market which is really not your definition of a balanced market. And if you go further, this chart, the circle in the middle is the Bitcoin supply. It goes to show the holders and investors of these supply Bitcoin. Only two. Of the total supply, 95% of the owners are actually controlled by 2% of the number of wallets. So it's very concentrated. And of these number of the number is largest because there's a lot of unhosted wallets held by individuals and retail. But 95% of the supply actually are controlled by 2%. And of those 2%, we can only make out named institutional investors, only 8% of them. The rest are anonymous. So there's no public record of who's holding the rest. So, and as you can tell, there is a growth in retail investors in those meme coins, which are actually still even more without any intrinsic value. So given this kind of, if you just think about the markets that we securities regulator regulates, like stock market and OTC market, such a strong concentration of ownership of the positions, it is actually a serious concern because of the market manipulation risk and market volatility risk and a lot of frauds as well. So this is leading to my next concern is we've seen over the years, the most prominent is the losses made by the collapse of FTX in 2022, and that's at least like 8 billion in losses. Even in more recent times, the cybersecurity hackers attack. I think it's only in the past year that there's been 1.5 billion stolen from one of the leading trading platforms. So this on top of the anonymity and regulated cons operating in cyberspace. This is on top of what I just described in the previous 2 slides about a very concentrated market, very concentrated ownership, products and structure, add to all this volatility and threats. So in short, it is a very high risk business, particularly when it's mostly unregulated. Now, as I promised, this leads to why Hong Kong go down to this journey of regulating Bitcoin, crypto, and the digital assets in general. So I want to roll back our time to 2017, and that was where the crypto exchanges were springing up in Hong Kong, all over Hong Kong. And there are ICOs, and Hong Kong at that time was actually known to be one of the largest base for trading. There were a lot of ICOs which could be fraud, which could be scams. And they're hiring the top lawyers from famous firms, joining the rank in this brand new business. As a regulator, we face 3 options: laissez-faire, outright ban, or introducing regulation. Now, the first option is basically you're sitting on your hands, you do nothing. And it's very easy to do because Bitcoin or its like doesn't fit into the definition of securities, and nor does it fit into a bank product. And so it is outside our ordinance, and it is not, we're not obligated because it's outside. And if we can actually say that, oh, this doesn't have any intrinsic value and we shouldn't be regulating it, because regulating it in a way is legitimizing this as an asset class. But then, another some of the countries have gone down that route is outright banning the trading of Bitcoin and other crypto. Now, it doesn't sit well with Hong Kong's open and capital market, which is free capital flows into and out of our market. And even if we ban it, our legislation can only be effect domestically. That is, we don't have extraterritorial powers, which means that our investors, our residents in Hong Kong can actually go on a website and go on internet to be trading. So the investor harm is still there, and they've been doing it. So outright ban doesn't really resolve the investor concern. So we think hard, and that was back in 2017-18. We decided to introduce regulation. As I said, it wasn't an easy decision because at that time, the only regulation is just the AML, which is by FATF, which basically just a very light touch regulation. But because we decided that the policy objective is to protect investors. So to us, securities regulator, we are less concerned whether it has intrinsic value or not. But then if we regulate it, we at least protect our investors from harms like collapse of the FTX, because you will be introducing all sorts of control. So back then, we started this journey to have a not just AML regulation on these exchanges, but full comprehensive investor protection, which means that we actually introduce, when you look at a cryptocurrency exchange, it is both an ATS, an exchange, combined with intermediaries like like a dealer and broker. So we actually take all the code of conduct and our regulation in the way that we regulate a securities dealer plus an exchange, and actually propose licensing these exchange. So that is how we began that journey. And from there on, we actually, initially, it started as a voluntary regime. That is, if you would like to get our license, then you come and do all these things. But then I think after the 2022 collapse of the FTX, we are actually more determined to regulate, because since then there have been scams, and the only way in which we can reduce the harm in scam is actually by legislation. And then by 2023, we already have the licensing regime under the Anti-Money Laundering and Counter-Terrorist Financing Ordinance, but it's just a place that we are holding all these digital assets regulation. Because in the regulation, we would say that unless you license with the SFC, otherwise you cannot market your trading business in Hong Kong. And from there on, we can, we earlier this year, we actually have a regulatory roadmap, and I would explain to you the what we covered there. Now, ASPIRE is the acronym we use for the strategic development of the virtual assets ecosystem, the regulatory framework for it. Basically, A is for assets. That is, we understand that you cannot be the liquidity. It's just like we developed the traditional capital market. You has to be global liquidity, and it has to tap into the global liquidity instead of like pockets and fragmented liquidity. And then a lot of safeguards, because we are in the business of building a trusted platform, which allow investors to invest without having concern for market manipulation and other concerns. And so this trusted platform, one of the important safeguards is the custodian system, because custody is of the private key, and custody of these assets are most important. And then the products, we would also allow different products to be traded. It is still a work in progress, but in addition to the cash market, we are also actually designing the derivatives market, derivatives trading, as well as allowing staking. Infrastructure is actually refers to the AML regime, because when we are inspecting our brokers on a traditional financial system, we reconcile their assets, which are in trust for their clients, against the exchange's custodian. So we are also building using technology solutions to trace and track these cryptos, which are in and reconciling it in the public ledger of these cryptos. And of course, we have to work with the industry. So we are doing, and this is give you some idea of the entire ecosystem. We've already had part of it. Now, it actually gives you an idea that we are blending or infusing tech into our traditional financial system. Now, on the top, the DA trading platform is one that we've already licensed and legislate. Currently, we have 11 licenses given out. The DA fund managers actually are existing. They already have our securities license as a fund manager. But then if they are doing or managing a fund with crypto or digital assets, then these are the undertaking that they need to provide in order to engage in this business. And then in terms of the brokers in the bottom, distributing DA-related products, it's very similar to our dealing and license, in which if you are existing our license with us as a broker, if you are distributing a DA fund, or if you are dealing in on behalf of your clients on the license platform, here are the things that you need to do. So we sort of have putting something on top of the existing securities license. So on and so forth with the advising. Now, in terms of products, some of you may know that we already allow digital assets, futures ETFs, as well as sports cash market ETFs. These are traded on our traditional exchange, and they are being managed by traditional finance brokers. There are two things we are consulting the market for legislation. One is on top, the custodian, the DA custodian, and the one is the OTC trading, which are under consultation. So when this is all done, we actually will have the comprehensive system, regulatory system for the entire ecosystem, which cover every interface that this system has with the public, both professional investors or retail. So currently we have 190 DA service providers, and we will actually be getting our new license, and which will be actually completing this entire puzzle. Now, I just have one page on the stablecoins regime. This is administered by the Hong Kong Monetary Authority, that is the central bank here, and it came into effect the 1st of August. Now, remember what I said earlier about the landscape for stablecoin. Tether and USDT, DC account for 80% of that market. Those are not regulated by actually any authority right now. So the use case of payment is 30%, mostly in developing economies. Now, I think we focused in this new regime, which has come into effect and actually open for application right now. We focus on the use cases of real economy. That is, for example, a supply chain, where tokenized the tokenized stablecoin is just like a fiat referenced token, which is one-to-one, basically one-to-one in terms of value. So it will require HKMA to be supervising it, auditing it, to make sure that it has the full backing of high quality liquid assets. And it is just like, if you look upon it, is an alternative or proxy for fiat currency, then you make sure that when people come and redeem, there are sufficient liquid assets in order for the redemption of investors. And so this is the whole idea. And the use cases, as I mentioned, will be supply chain. That is because we see the need, particularly among Asia Pacific or with South Asia as well. It sees there is a utility value in the use of tokens and blockchain in order to effect those payments. But there must be very robust infrastructure, very good, and more importantly, is the AML requirements. Now, next, I would talk about another case of the use of blockchain in finance. It's the tokenized funds. Now, we take those figures from BCG, which put out a report a year ago, saying that the global tokenized funds are 2 billion currently in AUM. The potential investment demand is 290 billion and estimated by 2030, 600 billion. Now, I have no way of telling whether this is the estimates are good or not, but certainly the global tokenized funds have grown a lot more this year, because Hong Kong alone, this year alone, we've issued, SFC has authorized $1 billion of these tokenized funds. More about it later. Next, why is it popular and what is the appeal? We actually look at the underlying technology of DLT blockchain as could be transformational for the traditional markets as we know it today. The vision is for the entire life cycle of the product, that is subscription, from subscription to redemption to transfer, that is buy and sell, record keeping, custody, they are all done on chain. Now, we are still a long way from that, but we are already seeing some savings in clearing and settlement, and it's there's a good audit trail of it, and it could be low cost and good customer experience. Now, of course, there are risks to go with it. For example, whether your legal infrastructure actually supports smart contract, whether it recognizes the ownership when you own that token. Now, the current pilots in Hong Kong and elsewhere vary in this degree of tokenization. But I think we're talking about the future, then the potential could be there. I'll go on to the next slides. How we look at tokenization and how, as a regulator, what we do with it. I think there are a key approach that we have taken is the regulator. The key principle is when you look at a tokenized product, we see through the technology wrap, and if it's a tokenized bond, it is in fact a bond, and we'll regulate it as such. If it's a tokenized money market fund or investment funds, we see through and we regulate it as if it is a securities, a equity fund or a money market fund. So basically, it is not the token itself; is just a technology wrap. It is not the crypto or the digital Bitcoin or the other things that we talk about. Now, so that's why, based on that, a year ago, a little over a year ago, we circulated a circular, which basically allow our licensed fund manager to be issuing tokenized products, and and to be experimenting on it. Now, another thing that we do is we have a sandbox to it. Now, as I just mentioned, I think the next slide will show you, maybe the next slide, please. Now, we have a total of tokenized investment products of 1 billion, as I just said. And they are mainly money market funds, because money market funds in Hong Kong this year in particular is still very attractive. And there's another reason why money market fund is popular as a tokenized real assets, is because you can actually use it as a repo, as a collateral for other funding. And so a much faster clearing and settlement cycle can actually help gain ownership earlier and then repo it for more liquidity. Now, the Hong Kong government has actually very supportive of tokenization. So they have actually tokenized green bond issuance and will continue to do so. And in total, they have actually more than $7 billion. Now, as I said, there are different degrees of tokenization. The ones that we have actually have two books. One is on the on-chain, the record keeping, and the others are actually custodied in traditional trusts and traditional custodians. Because, as I said, the underlying is still equity or bonds, and so they are custodied in the traditional way. In terms of efficiency gains from clearing and settlement is also some gains from maybe clearing and settlement of 3 or 4 days to 2 days. And one of the main reason is the underlying asset is not tokenized yet. That is the bond or if it's a tokenized fund, the underlying bond is not tokenized yet, or the equity is not tokenized yet. And more importantly, because the subscription is still done in fiat currency, and the clearing and settlement of fiat is still T+1. So the scale for the commercial adoption, the scaling of these products and tokenization is not there yet. And the key reason is the lack of interoperability. So if I go back to the previous slide, and that's where we work with the HKMA, and we have a project ensemble sandbox, and that's on your right. That is where we experiment with tokenized deposits and use of wholesale CBDC in order to subscribe to these products. And we put in those sandboxes some asset management initiatives in which banks would use tokenized deposits to subscribe, and several banks would do it, and then there are interbank clearing system. So you get the idea is the DLT and the is actually a parallel system, an alternative for the traditional operating system of traditional finance. But what we are doing here, the beauty of this is we have combined or infused tokenization with traditional finance. That is, you can still use your traditional finance way, but then for certain clearing and settlement, that can be efficiency gain. But if we move one step forward, then it will be all put on the on-chain. And the good thing is that because traditional fund managers, traditional banks, they are very compliant. They understand the need for compliance. They understand the need for AML. So when they are involved in these DLT pilots and work very closely with the tech companies, the providers of these tech services, we can actually together build a robust foundation. Now I would move to this is my last slide, and I will leave you with this thought. Is this the future of finance? Now, I don't have any crystal ball to predict the scale and speed of tokenization or the use of stablecoin in cross-border trade settlements or other forms of settlement. And I fully expect that it's a lot of challenge in order to have scale, as I've just explained. There's a need for interoperability of the different blockchains. It has to be very harmonized and different standards, not only within Hong Kong or any jurisdiction, but cross-border. And we fully expect that there will be different speeds in different jurisdictions. And of course, jurisdiction and regulators like ourselves have to take into account the investor preference and the utility value of these pilots. But at least in Hong Kong, at the SFC, we approach it like any new and innovative products in traditional finance. We prioritize investor protection, and we make sure that the infrastructure, the financial infrastructure has to be resilient, and the objectives of orderly market, transparency, deep and liquid market, they all apply. So because we know that if it's left unregulated, it will still grow. It will maybe grow much quicker, but then there will be, at some point, there will be threatened financial stability itself. So that is our thinking, is to work with the industry and to build this infrastructure and build this ecosystem step by step, block by block, and just as the way that we did in the last decades in building our traditional capital market. So that ends my presentation to you all.